anything I mentioned about things we've done, things I have done, things I called. If you go to resources and if you go to the performance page, not only we post a short video and a spreadsheet, but I post the complete recap, not a recap, the complete recording of the session, 2-3 hours, whatever it takes to get to our minimum target for the day, which is 50 ticks, or 50 points, 50 ticks, let's say. So you will see, if I say today I called a trade and I was able to pinpoint the bottom of the market and the top of the market, I'm not making that up. You can see this, and you can watch it in the entire version, uncut and edited, besides the spreadsheet for the ticks and the short recap. So that being said, what I will talk about today will be something called pinpointing the entries and exits and the direction of the market using volume. Whatever moves the market, it boils down to the volume. How many buyers, how many sellers. So volume is key to everything. Besides the volume, folks, there's a value, a hidden value within the volume that is being traded day in, day out, minute in, minute out, hour in, hour out. There's a value hidden, and if you dissect that, you will literally know where the direction is, where the direction is of the market, where the market is going for that hour, for that day, for that week. A simple example, and again, I'm not making this up. You can wait for the today's video to be posted, and you can watch it. Today, this morning, I said, and the market was like this. This is the crude, for example, and of course, we'll talk about how can you apply this into different markets as well, including options. I'm not an options trader, but you can use the same idea. The market was here. I said, folks, this is, and I drew a box. I said, this is the bottom of the crude. It's going to bounce from here, a box. And I took a trade. Unfortunately, I made about 25 ticks out of this trade. It was very slow. And I said 39, has a chance to go to 39.49. And during the session, you will see us talking about that too. And it went actually a bit higher than that. So how do I know this? Okay, other things that I do every weekend, during the weekend, I would send a newsletter, projections. I used to call them predictions, but some people's feelings got hurt, so we decided to change the name to projections. What are projections? I would actually open my charts in the weekend. That's when the market is closed, the futures market is closed. I would say, this week we're going to anticipate, let's say, for example, the Dow to go, and let me give you an example, the Dow to go up to this price, and this price to be a point of defense, and from this price maybe to come back down. And then the week after, I would say, okay, the market still has a chance to go up to the next level. And I will give you the numbers, folks, here. I will give you the numbers, exact numbers. And here's an example of last weekend's, and then we'll move forward, okay? This weekend past, I mentioned here, if I click here on this, where is the window for it? Right here. I said, and this is available to everybody, the most important thing that we need to know is the direction of the market, where the market is going next. It's hands down the most important piece of information you need to know. And then comes to what is your entry point and what is your exit point. So I said, in my newsletter, things such as, and all of them, you can read this whole thing. I said TF, the Russell touched 1105, and I was anticipating it to come back down from there. Last week I said 1095 to be the top the week before, and it was the top for like a full week, 1095 price. And at the end of my newsletter, of my projection, this is what I said. As you all see, that I was very bullish on the market for the past 4 weeks, because I've been sending this for a while. For the past 4 weeks, I said I was very bullish. Now, and this is past week, and I said now I am bearish. because I've been saying the market will go to these tops and then it's going to roll down, and I'm anticipating a new low for the year on the indices, okay, for the market to show us a new low. And for us to understand, why am I saying that with confidence? Why am I sending this information ahead of time with confidence? Why are we offering free trials to the traders? We offer trials, free trials every Tuesday. People can come in and see us trade on the smaller scales, and also we give advices on bigger scales. And here's why. When you trade, what is the most important piece of information you need to know is anticipating the market's direction. How do you anticipate? And we call it A, and then confirm, and then execute. So the strategy is ACE, anticipate, confirm, execute. The name of the business still Global Trade Room, and we have a live room in the morning, live room in the afternoon, and in the evening for the Asian session as well. The Asian session is run by one of my students who's been with me for a long time, Jay, out of Hong Kong. However, this is what happens when you look at any market. And let me give you an example. This is the TF. An example. You see the profile on the right-hand side, the volume. Pay attention to the profile on the side. And pay attention to how the market thickens, profile thickens here, and how it gets thinner. It depends on how many bars are printed inside this chart. So if I look at just one bar of 360 minutes, for example, one bar, let's say this one. Now the volume profile associated with it is only this much. Can we really trade using this much? No, we can't. You have to look at a comprehensive picture. Therefore, people who try and use the tape or the footprint, they struggle. I was one of the first ones who actually dissected the tape or the footprint, and I realized, the numbers do mean something, and I created the price magnet stemming from that. But then I jumped into the profile, and the profile gives me a new horizon, a new view, and the view is telling me everything that I need to know about the market. And look, the more I bring in of profile, of legs, which means the waves or the bars, the more volume profile I see. Okay? That being said, let me explain to you a few things, and then we move on. Now, in my newsletter for the past 2 weeks, I've been saying that, for example, the ES is going to go up to these prices, and I will tell you the price. You can follow, you can contact us, and you can get those newsletters mailed to you, and you can compare them to the time that we send them, etc. And this is, let's say, the ES. And the market would go. And then I would say the next high, and the market would go. And I would say the next high. This past weekend, I said the market is going to touch a specific price, a level, and then it's going to come back down. I think it was, what was it, 1044? What was the price today on ES? I don't have a chart on me with me now. Just let me double check, please. Give me a second. If I can find it. Never mind. And where does this information come from? Simply, we reached a top that the market has to respect. Why is that? Because this whole area that the market started from, which is here, the bottom, this whole area was one giant volume or value, I would say, that the way we understand it and the way we teach it, it's called continuation. So technically, the market or the S&P, ES, was in a zone of continuation. But this continuation zone had hiccups, and these hiccups would be here, here, or here, or here. This is where I would tell you this week the market or the ES has a chance to go to this price, and then has a chance to go to this price, and has a chance to go to this price, because although this is a continuation zone, okay, we also have hiccups within the continuation that the market will honor. And then we had a major hiccup right here on the top where I said this is the top. In fact, I had a radio interview last week. I actually mentioned this price exactly to the radio interviewer. He said, I'll put you on the spot. What do you think is the top on ES? And I said it, and I have the radio interview actually been sent to me. 2044. Thank you. 2044. I think I was off by a point or two, but 1044 level here was the top of the ES. Now Monday comes, the market hovers. Overnight we have something called a swing trading club. It's besides the live trading room, which we use actually the same software that you're in now, which is GoToMeeting. We have a Skype that all students join, and we share trades. Sunday night, I said, folks, I am going short on ES, and I went short. My first target was 2038, and I got my first target, and then moved 12 points on Monday, and then it went back up again. I locked in profits and on my last runner. Next day, same thing. I said, folks, I'm going back short again. Until yesterday, the market gave us that big move, and I don't know if we held that short or not. I have to go look at my results. I think we were short on yes, we did, Zakaria. Okay, thank you. Zach is saying yes, we did. Thank you. Appreciate it, Zach. However, when we reach a top like this, and this is specifically is anticipated 2-3 weeks ago, guess what? We honor that because it's stemming from the math behind the volume. Now, how many of us here, and I need, do you folks see the chat window? Can you see it or no? Can you see your questions by any chance?
No, they can't see the questions that are coming in.
Now they can. See that? Thank you. How many of us here trade technical levels? For example, a channel. Let's say a channel. You have a channel. Sorry. You have a channel, and any channel, and this is the top and the bottom. And you decide to trade. The market is coming down, up, and then down. You decided to trade long on the bottom of the channel. Just to your surprise, the market will take you out and then moves up. Typical, right? How many of us now will trade Fibonacci levels? You have one Fibonacci level you wanna mark it to honor. You have another Fibonacci level, for example, would be here. And let's keep it simple. Let's keep it at 3. And you have another one that is blue right here. And you say, I will grab a long from my 50% retracement. This is your 50% retracement. Because what? Because you are trained to take a 50% retracement. So the market comes down and bounces from here. Oh, you missed it. You say, okay, next time. The next time the market comes down, touches 50%, pokes, takes you out with a stop and moves up. Ah, come on. Third time, you say you stick with your 50%, comes back, now you are gun shy, and it bounces. This is a major issue with all traders, whether you're trading stocks, options, futures, forex. It's a major issue. Okay? Major issue. What do we do? Let's go back to the same levels. Okay? Go back to the same levels, example. And now I'll give you a different scenario. What if you are a GTR member with us who knows how to read the volume profile, and you know you know when the market was going up previously, for example, the market was going up. Now you're looking for a long because it was going up. On the side profile, the market created a volume that is basically continuation. Thank you. Excellent. So the market created a continuation area right here. We call it C, continuation. And then besides continuation, I forgot to tell you something important, is the market will not only create continuations, but it will also create levels that we call them rejections, R. Now we are clear. We have R, rejections, C, continuations. And right after that, the market created another continuation area. It's a bit different than the bottom one, but nevertheless, it's a continuation area. And I'm talking about, folks, when I'm saying this, I'm talking about, for example, market volume profile on the right-hand side. You see this? This is on NinjaTrader. We have it also on Sierra charts. You see this market profile, volume profile? And I'll explain the other indicators too, given the time. Now, let's go back to the same scenario. You are a 50% Fibonacci trader. You love Fibonacci trader. Fibonacci retracements. 50% is your favorite. 62% you like it as well. 62%. Okay? Bad writing. Sorry, folks. And this is, let's say, 38%. Now, given this, you know that the market has created a continuation area and it's coming back to where? See, it's poked inside this continuation. Are you going to take a trade from here, long? Yes or no? Of course no. Zach says no, right? No. Why? First of all, if you take the trade here, it means you're not looking at the logic of the market. It's a continuation zone, and I'm not taking this out of my pocket, folks. We do this day in, day out. Okay. Today, as I said, I was able to pinpoint exact bottom of the crude, and I said it's going to 39.49. That's 100 ticks, 110 ticks move. Okay. I didn't catch it all. We caught like 26, 27, 28 ticks out of it. It's in the video. The full version, not the cut. I mean, we post the full video as well. So now, that being said, you are not going to take this trade because you know this is a 38% retracement. Doesn't mean anything. So it means the market will not honor this because it's inside the continuation. Now coming back down, coming back down. You will wait. Are you going to wait for your 50% to hit? Anybody else besides Zakaria? Zach, you remind me of myself when I was a student. I was the first one to answer. Of course. Abe says no. JJ says no. Greg says yes. I'm not going to wait for my 50%, Greg. Why? Because there's a big chance that I'm not getting 50%. Look at the rejection, Greg. Look at the rejection. It's right here. So this is the entry. This is the entry. Okay, this is the entry long. Now, my other question is, knowing this, I mean, it's printed in front of you if you choose to listen, if you choose to read it, if you choose to understand it. And this is day in, day out. Anybody who learned this methodology, they really cannot look at the market other ways. I mean, we have reasons why we offer free trials every Tuesday. We have a reason why we have a Skype for the students. And we have reasons why we offer 5 days money-back guarantee to any new member. Anybody who joins us as a member, they have 5 days. And in the rooms, we have 3 rooms, folks. Before you ask for your money back, we give you that. Now, knowing this, okay, knowing this, is it important? Is it important for you to know your stop loss? Of course, and I will test you. Is your stop loss going to be? Hold on, before I do that, let me clean this. Knowing this is your entry, is your stop loss going to be the green line here, stop loss, or it's going to be the blue line right here? Where's your stop loss? So this is, I would say, 5 ticks, but this stop loss is maybe 20 ticks. It will be the blue line. Why would you choose the green line? Simply because, listen, that's a good thing. People are answering. I like that. As soon as we break the blue line, we are in another continuation. Is there anything else stopping it? Do you see any rejection to stop it? So if the blue line is broken, your green line is broken too. We call them smart stops. Okay? And sorry to say, there are dumb stops too. That's why we call these smart stops. What is a smart stop? A smart stop is this. If I know beyond a specific price the market will continue, why don't I wait for the market to get to that point and then have a stop loss below it? Okay? So are we good so far? Very good. And I'll answer questions momentarily. Now, is this enough? Probably yes. Now, sometimes, and this is when we have situations like today, this morning, we have a level, and when I say continuation or rejection, and when I say, let's say, this box, this is a continuation box profile, it's not as pretty. It's not very pretty usually, because in reality, it looks like, and this is IBM. In reality, profile looks like this. See how these, the more I bring in, the more legs, the more, for simplicity, the more bars I bring into the picture, the more volume I get on the side. See this? And I can basically expand it to line it up. I can shrink it. Okay? So now this information that I have right here, okay, it's telling me a lot of things. It's telling me where the market is going to go and where it's going to stop, specifically if I scale down. Okay? And when I say there's a box, a continuation, it's basically, it will be, for example, taken from a level, let's say, I would say from here to here, for example. I would say this all continuation zone. I'm not, not giving away anything, but I would say this is a whole continuation zone, and if the market pokes into it, and if it doesn't reject within the next maybe a few minutes, we're going to continue on the direction of the continuation, which is maybe short, for example. So this morning, we were trading the NASDAQ, the crude. We were stuck all morning inside this continuation. Now, knowing this, we might not be making money, but we're going to make something as important, saving money. Saving money. You know this, we just sit down. Boring. It was boring like hell this morning. Okay? But still, people appreciate it. We had one good trade on the crude, 2 bad trades, but the bad trades were 3 ticks risk, 3 ticks loss, and maybe the other one was 5 ticks loss, but the crude was 26, 27. Overall, it was a break-even day, some give or take. But it's important, folks, to know the market sentiment ahead of time, and it all stems from the profile. Now, how many of us here trade long-term? Long-term meaning even options, could be. I don't trade options. I don't understand them. All I know with options, it's important to know the direction, and then the time decay and stuff like that, you can decide on your own. How many of you trade stocks? Direction is very important. Futures, Forex. So my question is, for those who trade short-term, it's exactly the same thing. And I'll give you a quick example. One of the strategies that we use is going to be the channel. And one of the channels the channel that we use called Fibonacci. Sorry, it's called a Don Chain channel. Here, Don Chain channel. The setup is 20, and with it I use a MACD. The MACD is 9:45:18. If I miss anything, folks, just email us, info@futuresfx.ca or info@globaltraderoom.com. So generally speaking, for short-term traders, when the MACD is above the zero, we look for longs. Okay, watch this. The MACD is above the zero, we look for longs. For example, here, I would say right here, this was a long. Why? The MACD was above the zero. It popped above the zero. And the histogram popped above the zero. Also here. And also here. Also, we have longs from the middle of the channel. Now, when I say a channel trade, for example, here short, below the zero, we're looking for a short, whether from the bottom of the channel, the top of the channel, or the middle of the channel. That is the anticipation portion of it. Michael, I don't know the difference between the channels, between a Dunchain channel and Keltner channel, but it doesn't matter. Why? Because whichever channel you use, we talked about what? We talked about something called confirmation. Okay, let's assume that you have a long from this price, right here where the arrow is. However, that arrow, let's duplicate the arrow here. This is your price you're going to go long. You want to go long from, and the market is coming to it. But that arrow, okay, there is nothing to confirm this in terms of profile. That arrow, that area, that price that you want to go long from, it's not sitting at a rejection. In fact, the rejection that you're looking for is right here. So are you going to still take this trade? Of course not, because if you take it, you're going to be stopped out. This is your rejection. So you're going to basically ignore this trade and look for another trade from here. And this could be a bottom of the channel on a different chart, on a different channel. This is 1597. It could be the bottom of the channel on a 2584 tick chart. And all these are Fibonacci numbers, by the way. I'm not discounting the math of Fibonacci. And you see the same arrow sitting at the middle of the channel on a different Fibonacci number, 2584. This is an automatic Dunchain channel for me, the way I set it up, follower, retracement, okay? So this is one of the things that we use. Now, besides the volume profile to pinpoint, and I'll give you the idea behind why we use indicators. Some of you ask, you trading profile, and you explained it very nicely. You explained when there's a rejection, you take that rejection on a profile. However, why do you use technical indicators? Well, the only technical indicator I use is basically the channel, the Dunchain channel that I showed you. The other indicators that we use are based on volume. One of the indicators that we use, we call it, and I'll give you a look of it. Where is it? Where is it? Where are you, buddy? Here. We call it the DRL, the dynamic reversal level. Hold on. DRL. What is DRL? Let me remove this profile. You see those lines on the side, not the spider web, but these lines on the side. You see these lines? 1, 2, 3, 4, 5. These lines coming from different time frames, different time zones. 240-minute chart. They're all embedded inside one chart. 180-minute, 120-minute. What this is an indicator, a combination of 8 different indicators. Okay, all of them are volume based, and all of them are printed on each chart. And I will give you 1, 2, 3, 4, 5, 6, 7, 8 indicators. When 2 of them at least line up on the same price, it will print me an indicator, and it's dynamic. Every time a candle closes, it goes away. The indicator goes away and comes back in the new candle. It's very dynamic. It's all volume based. And how do I use that? Besides the PowerLines is another powerful indicator that I use. We use. The PowerLines is when we connect fractals. Anybody familiar with fractals? Fractals fractals is when you have a candle, a top, followed by two candles on each side, at least two candles that is closed lower, or a bottom when you have two candles on each side, at least two candles that is closed or opened higher, right here. So when we connect them, you create something called we create something called power lines, and these fractals also combine with end of buying, end of selling on the tape when the contract numbers descend or ascend. But that's something it requires more explanation. Regardless, these power lines, when we connect them, the green ones will create a very powerful resistance level. The red ones will create a very powerful support level. And this is an example right here, right? It's happening right in front of you. Look at this power line created between this candle and this candle. Look how the market stopped on it here. And the market is very slow now. But if you have an intersection, it's even more powerful. It's either going to break down fast or going to bounce back up fast. Again, the market is not a good idea to give us. It's not going to give us a good idea. It's just before Easter. It's slow. But if the candle here closes 10 ticks below this bar will go away. And you can set it up the way you want. It's up to you. Regardless of this, I will only honor these power lines when literally they are lined up with profile. Now, why do I use, again, I'll go back to the same question. Why do I use these indicators? Although, if we have a continuation zone and it's followed by a rejection zone, I know my long is going to be from here. And I know my stop loss is going to be right here, because if this is taken, it's going to go to the next level. However, sometimes, and I'll give you another plot, sometimes this is your continuation, and this is your rejection. Your rejection is a bit, your rejection is a bit bigger than normal. How do you choose to enter this trade? What helps me pinpointing to this is, remember we talked about power line, so if there's a power line going through it, this is going to be my point of entry. Right here. This power line going through because this whole thing is a rejection. Or if I have a DRL sitting here, a DRL is dynamic reversal level that I created. Is the DRL sitting here? So this will be my entry. Okay, so we use the indicators only when they fall into a rejection area. Today, if you go and watch, as I mentioned, when we offer our not only we offer the performance page. Not only we offer the spreadsheet, not only we offer the short recap, a few-minute recap for the day, what happened and what we traded, how much we made, whatever, but we offer a full, boring session that, sometimes it's boring, 3 hours, 2 hours, just for me to confirm that whatever I said here and whatever I said here, you can confirm it with watching the entire session. We don't cut it, we don't edit it, it's right there in front of you. So today, if you watch the session, it's not posted, it might be posted sometime soon. Actually, you will see students, and every day you'll see students, they will tell me, Simon, we have a short coming up, for example, here. And I will say, okay, that's fine. We have a short coming up right here. They will say it's a profile rejection because the market is going up, so it's a rejection here, and we have a DRL line. These are DRLs. I said, wow, that's a good idea. Let's watch for a short. And they will also tell me this is your stop loss. And look how the market, I told you, it's either going to break down below the intersection or it's going to go back up, and it went back up. Again, I cannot trade it unless I see the profile that is associated with it, right? Which could be looking like this, you know, could be looking like this profile. So knowing this information, it's important. Talking about, Michael is asking, I missed the press, the part of the press. I don't know, did I say something about that? But what I'm saying is that if you are part of our newsletter, if you sign up to our newsletter on our website, you will get weekly projections. We'll tell you the ES, the TF, the NASDAQ, the crude, not the gold. I don't like the gold, but it will tell you where the market is going, what is my next projection, what am I looking for, okay? So that is part of it. What we offer, folks, is this. Before I go into questions, what number is, how many is in the, I don't know, I'm not looking at it, Mick, now on the ES, sorry. But this is what we offer. If you go to our website, I highly encourage you to sign up with our, to get our newsletter. So you'll get an ebook. I don't know if Dimitri has the ebook available immediately, but I think we do. And that will give you a chance to be in our email list. So I will give you this. Some people say it's crazy to give out this information, but it's really a small part of what we do. I'll give you my projections, and for the past 6 weeks, not only I've been projecting the market's direction, but to the tick, 1095 3 weeks ago on TF, I said the TF is going to 1095, and it's going to hold massively. And if you look at the TF, which is the E-mini Russell, 1095. Look at this price. Sorry. Look at this price. What do you see here? 1095 here, to the tick, 1095, to the tick. And then it hovered, it went down. I was short on this. And then it hovered, it went up. And I said in my next newsletter, which was this Saturday, I said 1100. 1100. And then I said we might see a new short, a new low for the week. For the month, sorry. A few weeks ago, I said it's all in the videos in the members area, folks. If you don't see it, just email us, and we will show you. It's timestamped. When I can make a call, it's timestamped. When I make a call in the room, when I make a call on Skype, it's timestamped, so it's visual. So you see what time I called. You will see students reacting. 3 weeks ago, I said not 3 weeks ago, a while back. I don't know exactly what date. Maybe Dimitri will tell me. And that comes from the profile 6B, the British pound. I said it's going to open. It was Sunday. It's going to go up. It's going to open with a gap, or it's going to come back down to this price. And I specified the price. And I said this price will be the bottom of the week. In fact, it opened with a gap, 3 ticks gap, and it came down to this price. And then it continued. 300 ticks for the week. And I have that call actually recorded on Skype. I'm not making this up. Okay? So what we offer is knowledge, information, how to see market, how to see the market, the direction, how to see the reversals, and if you're trading short term, how to pinpoint to your exact stops, all stemming from the values that are hidden inside the volume profile. Okay? And if you go to the home page, please sign up. You will get that newsletter. I know the website is a bit busy. I'm trying to work with Dimitri to make it a bit simpler. It is very busy. But if you go to rooms and trials, we offer trials every Tuesday. Okay, every Tuesday. What does that mean? It means we're not afraid of having people seeing what we do. Come in, see, ask questions. Look at the testimonials, please. All these are all students. If you go to resources, I want you to pay attention to one important piece of information. That's nice. Thank you, LGNet. Nice. Thank you very much. Thank you. Yeah, 31. I expected to go to 36. Yes. I expected actually 40 as well after that. Hey, Hala. Spy, thank you. So, if you go to resources, if you go to education, there's one piece of video that I want you to watch, please. I want you to pay attention to, called Adult ADD, here, on the verge of greatness. Adult ADD and how it manifests itself in trading. Unless you're getting married today, really, you need to watch it. It's 1 hour. It will change your life. If you have not watched it, or if you've seen it before, long time ago, you need to go back to it, please. It's not done by me. It's done by Dr. Kenneth Reed. 1 hour video. It's very, very valuable. Okay, very valuable. We offer a membership. Okay, when we have an Easter special, we give you chocolate eggs. The Easter special is this. There's a comprehensive package and there's a basic package. Both packages come with 5 days money back guarantee, regardless. Okay? The basic package, it's really basic. The comprehensive package is very comprehensive. It combines my room, morning and afternoon. It combines the entire education, which is tens of hours of videos and daily support in the room, answering your questions. It will also give you the access to the Asian room, which is with our sister company called TTI. That website is not quite ready yet, but you will be supported and taught by Jay and 2 other moderators, Forex and Futures, how to draw the levels, how to pinpoint to the levels. Well, they will answer your questions. They will draw the levels in front of you. You will see, and you will understand how they work. So it's full package, morning, afternoon, and evening. Okay, that will be included. So the special offer is that you will get the comprehensive package for the price of the basic if you sign up before Monday. Here, this is the offer. Any questions? Contact sales@globaltraderoom.com. I don't know, Dimitri, if sales@globaltraderoom.com email is there. I'm not sure. No. No, you need to add sales, contact sales, even if you don't have the rest of the information. Please do me that favor. Adult ADD video is on our website. Just go to resources, go to education, and wait a few minutes, and it's going to come up. Just click on it and watch it. Okay? Now I am open for questions. Please don't miss out on this special offer. It comes with 5 days money back guarantee, and it gives you the comprehensive and the price of basic. Now, really, I mean, if you think, it's nice, it's cool, whatever Simon says is nice, you have 5 days to see what we do and to confirm it. I'll give you an example. I want you to go to our YouTube channel, which is on the website. This is not my YouTube channel. Here's my YouTube channel.
Hey, Simon, don't mean to interrupt, but we got about a minute left.
Oh, okay, then I'm done. YouTube channel, please watch the videos, sign up, and beautiful. We do that. I mean, it's up to you. I mean, the idea, Greg, is to teach you as students trade different things, trade treasury notes. It's whatever you want to invest that education with, however you trade it. It's very it's up to you. Thank you, Simon, Greg, Timothy, LG, Hala, Michael, Nick. Appreciate it. Thanks, everyone.